Gold prices have again increased 38% in a year. Typically symptomatic of a downturn. Slowdowns typically are very bad for middle and lower income, like I discussed there.
A lot of the indices are like 25, 30 years old. Like the basket should change. No longer should it be bread and anda, right? It should also inculcate a lot other things.
Democrats during Barack Obama or during Bill Clinton, we depreciated 4%, 5%. You look at this data, so Rupay credit card is credit on UPI. It has become 28% of credit card transactions in the last 7 months of financial year 25.
What's the economics around people getting excited about using credit cards because they get these cashbacks and loyalty points and lounge access and stuff like that? How does that economics work? Consumption लाना है तो यार credit access तो देना पड़ेगा आपको.
You know what is interestingly happening is that payments is becoming engagement in India.
Hey guys, welcome to a brand new episode of Asymmetric. I'm joined, of course, with my partners in crime, Revant and Chirag. This is episode 10, and after a tremendous amount of FOMO over the last 2 weeks, where Revant and Chirag did episode 9 without me on due to health reasons, where I had to watch from the sidelines. I'm so glad to be back. Today we have an amazing episode lined up for you. I think two large topics, but we're covering the economic slowdown in India. We have seen what's happened with the rupee, with respect to the dollar, what that means in terms of the markets and the corrections that we have seen over the last week or so. Consumption is kind of tightening. We're seeing it happen. So we're going to discuss whether it's a tightening of consumption, whether it's a reallocation of money that people have, and of course, what that means for founders. We're looking at new age ways in which a lot of this gets measured. So we're seeing whether the fundamental structural economy is either kind of changing in a very fundamental way, and measuring techniques are kind of lagging behind, or is there something more to worry about? Again, three founders discussing this from very kind of their own lenses. So it's not a macroeconomics class, but a more practical observation from the three of us. The other topic which we're discussing is on Rupay and the rise of I think the next UPI 2.0 in a way where UPI is now becoming huge and ubiquitous, and now getting into credit cards. Really, like, is this a view to build a strategic national asset where we take on at a governmental level and at a stack level, we take on Visa, Mastercard, and take this 30-40 million credit card users to making credit card as a product more accessible to a much larger part of India, in a way to ease credit, and then of course increase consumption and kind of oil the economy that way. A lot of very, very interesting data points, charts, and kind of economics of new economics for banks, new economics for credit card companies, and of course for consumers and hence founders like us. Do not for my personal favorite part of Asymmetric, of course, other than the awesome discussions, is the last 10-15 minutes on health and wellness, where we kind of Chirag and Revant are way ahead of the curve on this one compared to me. So for me, it's like a student asking basic questions ki boss, how do I survive as long as possible with a healthy body? But really cool insights on from wearables to supplements to exercise, sleep, all of that. So really cool stuff in the last 10-15 minutes. But that's a great power-packed episode that we have planned for you guys. And do come in with comments, topics that you want to discuss, critiques, observations, anything that you would want the three of us and our guests. We do invite expert guests on the Asymmetric podcast on and off. If you want someone specially to come on board, if you want to nominate yourself to come on the podcast, reach out to us, and we'll be very, very happy to have a conversation. So let's dive right in. Just going to present my screen for you guys. The presentation is in the link to the episode. You can check it out and have a look at it. Excuse any typos, like Revant and Chirag have said. I've been unwell, so there may be some typos, but other than that, I think we'll make sure it's proofread on sources and so on. Okay. So I think just some top of mind articulation of the slowdown we are all observing. Okay. Disclaimer is we are not economists or experts, just observers. So hopefully, this is taken in that view. This is not in any way preachy or recommendation driven. Just observations from three founders operating in India. I think the one thing that is top of mind for everyone is that rupee is in free fall with respect to dollar. I think what has happened over the last 6 months, we are now touching between 86, 87. There is speculation that, that it could get to 90, 95, 95 being the psychological barrier, which a lot of analysts are looking at. And we have tried. I think we have sold dollars. Our forex reserves have fallen to a 10-month low to 640 billion odd right now. And I think for the layperson, for an operator, I think for Bombay Shaving Company, for example, the immediate outcome of this is that things become expensive for us to make. We have global supply chains. Most people operating in India who sell something or the other will have a global supply chain, or will have employees outside, or the dependence on a dollar is significantly higher, more than just petrol and so on, right? So, and the immediate reaction is we should pass the price on to the consumer. So, immediate impact of this, of course, is inflationary for us, and I think that is one thing that is super important to just think about, because inflation is something that affects middle income and lower income a lot more, because anyways debt ratios are going up, savings are going down, and for the middle income and lower income tier 2, tier 3 India, I think this is actually fairly ominous in terms of what it means for their wallet. I think one thing which is interesting to note is that it has remained stable with respect to other currencies. So we heard our finance minister say that it is not that the rupee has weakened, but the dollar has strengthened. There is some truth to that. If you look at us against the dirham or against Middle Eastern currencies, for example, we are still significantly depreciated. But compared to euro, RMB, which is a Chinese currency, or to yen over the last one, these are all 1 year period graphs. I think broadly volatile, but kind of at the same levels over the last 1 year. So there is some stability here. So I think one question which I will leave with Revant and Chirag is that do we need to now kind of reduce dependency on the dollar? And this is not just something that founders need to think about, but countries and so on, where you become a lot more kind of local in terms of more dependence on countries outside of the US in that way. I think impact on the market is immediate, right? We've seen a 5-6% correction. These are again 1 month x-axis graphs. So on the left, you'll see Sensex. On the right, you'll see the Nifty. And you've seen 5-6%, 6% odd correction in both. 31,000 crores of FIIs have continued to sell in the first 2 weeks of January. This is data till 15th of January, which is significant. And I think that trajectory is only going to sell. I think exchange rate exposure, Revant spoke about it last time as well, has made people jittery. Interestingly, gold prices have again increased 38% in a year. Typically symptomatic of a downturn. This is not just an Indian phenomenon. I think you'll see this across the world. Here you'll see like probably a 1 year graph where there's a 38% increase. This is rupees per kilogram. So if you have a tola mindset, just divide this by 100 on the y-axis. But I think the question that this leads to is there now reallocation from FMCG and auto sales, etc., to real estate and gold and kind of more fixed assets which people can count on in bad times. And I think that's what the main question. I think it comes down to decreasing demand, and the other 3-4 kind of bullet points I put together. Everyone knows car sales have fallen significantly. December 2024 versus November was a steep drop. 45% for cars, passenger vehicles, while 54% for two-wheelers. November to December has traditionally been a 20-25% drop. But this time it's been absolutely crazy. So people are definitely discretionary spending, especially large items, is going down. One interesting stat for you guys, FMCG is sitting on 35 to 40 days of inventory. Typically there's 15 to 20 days. So in the wholesale distribution, retailer supply chain, we are seeing build up happening. And that is not cool at all, because, you again, this is immediately seeing that the wallets are kind of getting closed. We are seeing similar trends in appliances. I was not able to find the exact data here, but broadly, I've spoken to a couple of people who are building in this space, and investors also. I think there is similar concern, in fact, slightly more acute here. And if you look at, for example, salaries of all listed companies, while profits have gone up by almost 320% over a 5-year period, salaries have not grown at the same rate. In fact, FY25 Q3 last quarter, we saw only a 9.5% growth in salaries on average which is much lesser than the the usual early double digits that we usually see. So again, not in any way exhaustive, but definitely indicative that if salaries are going down, that means is this symptomatic of a deeper liquidity crunch? And I think that's the question which everyone is coming down to. All of these are symptoms, right? Markets falling, gold investments going up, FIS coming out, rupee kind of falling, and government struggling to kind of manage it from a volatility standpoint. But the real issue is, does this mean that we are actually the money has become dearer to the average Indian? Are we spending less because we have less? Are we saving less because we make less? I think there are some questions I'll leave with Revant and Chirag. That is there going to be a resurgence of brain drain? I think these are more second order questions. That a lot of last 10 years saw a lot of people come to India, especially tier 1 India, India 1 as Revant calls it. And I think will productive Indians look for more tax friendly wealth accretive opportunities outside? Again, something that we saw in the 80s and 90s a lot. Second is this going to lead to larger economic divide and inequity? Slowdowns typically are very bad for middle and lower income, like I discussed. They're often very good for richer people. So does this lead to a dwindling of the middle class that we have so carefully built over the last 75 years as independent India? Will it start seeing, like, instead of a burgeoning middle class and social migration upwards, will we see migration in two directions, with the minority going up and a majority coming down? How do we level up on manufacturing? I think the only way we really can create capital for ourselves is we go from service and agriculture and IT to actually creating stuff and creating value. So I think there's enough discussion. I think Revant and Chirag were discussing an episode dedicated to this, but I think there's one question I had. And, or is this just a more cyclical slowdown where we're seeing reallocation, more global phenomenon, and it's not as structural as it might be? But, if that is the kind of consensus we have. My personal view is that this is more serious than the earlier, kind of bearish situation I've experienced over the last 9 years. We started the company in 2016 in a bearish situation. COVID was, of course, bearish in its own way. 22-23 was difficult. But this, I think, is now turning out to be a lot more serious, at least in my personal view. So, yeah, I'll leave this for I'll pause here and kind of take thoughts.
Well, excellent summary on the current data points, Shantanu. But I just want to layer a couple of other data points against this and get your thoughts. Apple just released data on, I think, full year 24. I think $12 billion plus of manufactured iPhones and other stuff from India, right? We exported $12 billion worth of Apple devices from India last year. Looks like that number this year will be $15 to $16 billion. If you look at all VC-backed consumer brands, they seem to be doing well, plus raising more capital, etc. So I'm just looking at different data points and saying, is this a metric issue? Like, for example, if you are a business that is been in distribution with general trade and modern trade, or has a very legacy, let's like you showed car sales, right? So cars essentially are sold through auto dealers. So that distribution model has been around for the last 50 years. Tesla came along and said, we'll do no marketing, direct to consumer बेचेंगे करके. So if you look at auto dealers and their sales, they'll obviously show that it's dropping because the new customer today is saying, I prefer this model. So is this a selective data point where most of the economic data is still taken from traditional, in traditional ways, if I can call it that, versus not looking at new age behavior, where there is some consumption happening, but those data points are not being reflected. Let me give you a very anecdotal example, right? So one of our businesses is in, let's say, men's hair loss, where we also have a prescription drug that we sell, but we sell it direct to consumer because we are also e-pharmacy. Now, if I look at the IMS data, that is captured by going to every chemist and pharmacy and saying, "Acha, ye molecule and this drug, aapke chemist," like, they record everything, right? So you know how much of that molecule is sold, and that data shows that this market is stagnant, it's not growing. But I think the industry also moves, right? People are not necessarily now going to a pharmacy or a chemist. Let's say they're buying on QuickCom. Where is that data being corrected? So I would actually take all of these data points with a pinch of salt, where, like I just read today, Zepto said we are at 3 billion GMV run rate. So if you take the quick commerce guys at, let's say, a 10 billion GMV run rate, e-commerce on top of that. I don't know where those 70, 80, $100 billion of GMV is getting captured, because those seem to be still on a tear. That doesn't seem to stop. So I keep wondering if I was talking to someone last week where they said that the way inflation is calculated, a lot of the indices are like 25, 30 years old. Like the basket should change. No longer should it be bread and anda, right? It should also inculcate a lot other things. But वो हुआ ही नहीं है. It's like census. You can't keep making decisions for a particular state or a country when the population mix changes or the demographics change significantly. So while I think the data points are all correct, I'm just wondering if they're a little selective in nature because the methodologies are still age-old, whereas the consumption patterns seem to be shifting out of those age-old distribution models. I don't know if you guys have a thought on that.
We see a clear divide in the way economy is being looked at. Premium sectors continue to grow, or companies which are serving tier 1, like Revant is saying quick commerce companies, we are seeing D2C grow, healthy growth, right? So there is, of course, a channel shift which has happened. And, Shantanu, while, you said that you saw a little bit of slowdown in 2016 and now 2023, and now we are seeing. But I think if you start to look at long term, like, you look at charts 20 years, economies don't go up linearly, like, every year on year. They will go through these cyclical ups and downs. My sense is this is more cyclical. We are worried about rupee depreciation, but you look at the 20-year chart. We discussed in last episode, every year on year, there has been a 3% depreciation. So it's not something new. It's not something new which is happening. Similarly, I think, we have been growing for a while at close to 7%. Now it looks like that there might be a little bit of blip. But long-term secular, growth story is like, in my view, very, very intact. In fact, what you were showing, I'll just pull up, I think to your chart only, I think India probably has fared well when it compares to other emerging currencies. That we are only 3% depreciated, if you look at it. China is also 3% depreciated. And largely because, dollar with Trump coming in has appreciated, and the US economy is expected to do well. In fact, I was trying to pull out this data as well, that, if you compare it to Republican and Democrats, does rupee depreciate more? Right? And this is an interesting one, that if you look at Democrats during Barack Obama or during Bill Clinton, we depreciated 4%, 5%. This might be a little bit selective, but a lot can't be put on only Donald Trump. I think it's got to do with that US has got elections, and now, looks stability is around the corner, growth is around the corner. However, I want to make a point that, you look at India economy, 20% is exports, right? Out of that 20% exports, 40% is software exports, and then 60% is manufacturing. Wouldn't this, in this whole world going towards that, okay, we should have China plus strategy or China plus India strategy, doesn't it put us in a better situation with rupee depreciating and we becoming much, much more competitive and like taking a real shot at taking share from China? My sense is, government is trying, but I think they also realize that we need to push exports. We can't be super dependent on only private consumption, which is the dominant GDP percentage. And how do you push export? How do you become competitive? Right? Currency depreciation helps us.
It's a very good point. I think I was reading a stat the other day. Almost 55% of global capability centers, GCCs, are now being built out of India, right? And I think we continue to have the advantage of being English speaking, mathematically smart kind of folks who kind of built out the IT boom. And you're right. I think rupee depreciating is great for exports. So we become a lot more competitive. But I think then the onus comes on us to kind of create speed, because agility of export increase and has to kind of stay in line with this. Otherwise we will continue. We will not be able to stem the fall. And that's the issue. The inflation, we have not been able to control, whether it's interest rate or whether it's, forex. We have not been able to control inflationary, especially all inflation, not just, the wholesale or food or, stuff that we measure, but all inflation, we have not been able to. So life has become costlier for the average person. And that is something that we have to make sure that And that's the issue, right? People who export will, of course, get advantage and grow and so on, but that's still a smaller percentage. So will that create, again, more divide is the question. How do we kind of make that more inclusive? And that's obviously a more deeper question around how do we kind of funnel talent in that direction in a more meaningful way?
But इसका answer manufacturing है Shantanu, मेरे हिसाब से तो. Yeah, because
Hey,
if
but
I
even GCC भी है, just to
GCC
put
भी
a
है
number,
थोड़ा सा.
we have 1700 GCC at the moment in the country. That's expected to become 2200, 2300 in the next 3-4 years. So that's you can see its benefit in terms of skilled employment. That's going to
100%.
happen.
But I'm just talking, if you take an absolute year, अपना trade deficit is around $50-60 billion a year, right? China trade surplus is at a different level. It's like, I think, $1 trillion or something.
Yeah, $1.5 trillion, I think, $1.5
Right?
trillion.
$1 trillion a year in trade surplus. We are $50 billion in trade deficit, and the difference is manufacturing. Right? So, if you just take the Apple example, अगर हम साल का 12 billion Apple devices, अगर उसको 20 billion कर देंगे, and then let's take 20 more things, right? And why can't we become the manufacturing hub for the world, like China did over the last 20 years? Even if we get 1/10 to that, अभी तो 1/10 भी नहीं है. Automatically we reduce the deficit, especially, and this debate goes away, right? In fact, the rupee then starts strengthening if you start having more surplus, because then you can play around. You have a trade surplus that gives you forex reserves to play around with to keep strengthening the rupee and keep balancing this in a better way. Today, the fundamental issue still is that we import more than we export. We just have to increase our exports, and there is a limit to how much you can export services.
Yeah.
Right? Yes, because वो end में आ क्यों रहा है? क्योंकि low cost है अपने पास. Right? Manufacturing, I don't think it's a question of cost, it's a question of quality. And it's a question of how much can we produce and how much can people reduce their dependence on China. And the reality is the delinking is absolutely real, right? With the latest election results going to Trump, it's very, very clear that everything is going to get split, right? They're just going to make sure that there's a massive import duty on everything that comes from China. Things are going to get expensive. It's going to hurt the US in the near term. But in the long term, it's going to help them because they will start de-risking their entire economy from Chinese imports. So if we don't take this opportunity in the next 3-4 years and really build out a strong export, I think product export portfolio and reduce the trade deficit and inch towards hopefully a break even and then maybe a trade surplus. Answer to वही आने वाला है वो. मतलब मेरे हिसाब से this is long overdue. I think you're right, the government is trying. I'm now seeing a lot more entrepreneur startup in manufacturing.
Manufacturing,
right?
yeah.
I am now seeing VCs saying, boss, let's back manufacturing companies. Because it may be more of a private equity style bet, but at least you know that the demand is real, not just within India as consumption grows, but also for exports. So I think the next 3-4 years would be interesting to see if we can build out more and more of these manufacturing hubs per se.
The only thing
Manufacturing capex cycles are long. I don't think so, Revant. This you can see some leading signals in the first 3-4 years, but we have seen in our banking days that these are long capex gestation.
Electronics assembly में इतना long नहीं है रे. See, we are not
But
manufacturing.
then you
things
don't
with
capture the value. You don't capture the value. If you do only assembly, you don't capture the value. You have to do the real manufacturing.
Fair point. But I just think
I think what you are mentioning is that services we are there, and that will continue to with the depreciating. Even if it gives us even more winning edge, we'll continue to scale. I think what government with this is trying to solve is that can we be an export leader as well? And I think government also fundamentally is thinking that that's the sector where most of our mass janta can be employed also. Right?
Correct.
You think about it that IT services can only employ like highly skilled labor. Whereas what happens to the real mass janta, 1 billion people?
Correct.
Yeah. I also feel like, for example, manufacturing, I think we should discuss this in more detail. I agree with your idea of having a manufacturing focused discussion.
Also, women in workforce, right? Like a lot of the assembly work, Chirag, is easily done, and we have an abysmal women in workforce percentage. In fact, I was looking at this data where South India GDP is, the gap between South India and North India is increasing. And there's a very clear correlation to the labor participation by women in South India compared to North India. So, and it's largely assembly. All of these Foxconn, all these plants where, a lot of the assembly work is being done by women who were either daily laborers or did not have a source of income before. So, मतलब मुझे तो लगता है कि ये the data, like the early PMF is already there because the data points are very clear on this. We just need to double down and go all in on some of these. But it's eerie to see that, by the way, South and North India divide, because if you see every new manufacturing plant coming up, there's a lot of Japanese, South Korean companies now setting up manufacturing plants in India. It's all in South India because they are seeing that disciplined labor workforce availability is much higher. Not just that the governments are more keen to give them land and some shops to make sure that they set up, but also the fact that disciplined workforce availability is significantly higher in South India.
I think the one amazing data point that is on the side is the best bibimbap, which is a Korean dish that you will get in India, is in that one belt where there is Kia and Hyundai on the Tamil Nadu border, where some of these expats have kind of created like a whole chain of Korean restaurants, and that's where a lot of like K-pop and K-culture followers are going there for like the authentic local Korean fare, but in India. On a more distinct note, right? I think, see, one is bringing manufacturing to India, and and I agree with Chirag that assembly is kind of capturing 20% of the value, but 80% kind of still stays outside. But how quickly do you do it? So, for example, I spoke to Abhishek Ganguly, the Agilitas founder. He bought India's largest shoemaking company. I did not realize that making shoes is such an engineering heavy requirement. It's called Michiko, and he raised a seed round, bought the company, and now September onwards, you will not be allowed to import shoes from China. That's what he was saying. BIS standard and so on, right? Now you have companies like Comet and Neiman and like a bunch of these startups who will now be against the clock trying to figure out how do you create manufacturing in India and build factories, and because capex cycles are long, it's like telling a student कि तुम अभी पढ़ाई करो बोर्ड एग्जाम के लिए, अभी केबल टीवी भी बंद, बाहर खेलना भी बंद, सब कुछ बंद, तुम पढ़ाई करो. Now that sometimes leads to good outcomes, but many times these kind of step changes can also lead to burnout or so on. So startups or companies that, for example, even us, we will need some time to figure out how to create a trimmer factory or a razor factory. We don't have that ability. So, and it also starts from scratch. Like it comes down to education, our entire training institutions, like ITIs, for example, which government, we need to create culturally, we need to make manufacturing more lucrative for people, not just at a labor level, but also at a more non-blue collar level stuff. So I think it's a complicated, longer journey, and it's not going to happen in like a few quarters for sure. I think synthesis is that there is definite consumption liquidity slowdown and crunch. There is reallocation. There are obviously data points around the fact that industries are changing, whether it is from general and wholesale to maybe direct to consumer, whether it's auto to phones being made in India. But I think the crux of it is we need to make more. So depreciating rupee will give us a opportunity to also export more, but that opportunity needs to be more spread out equitably, and I think we need to make more. I think that it all comes down to the fact that we need to be more productive as an economy across the board. So yeah, I think from 3 non-economist founders, I think that's a good discussion. I'm hoping people will
I love the self-actualization. Good discussion. उनको पसंद आया नहीं है, हम तो बोल रहे good discussion है.
You usually know, right? You usually know when you.
तेरे को मजा आया, I agree. तेरे को मजा आ गया. That is.
और Shantanu knows his audience कि उसको पता है audience will be back, so I'll be able to say कि देखो बढ़िया चला है.
But anyways, Chirag, over to you, man. Over to you. You have an interesting topic for us.
Okay, let's begin the topic 2 of our discussion. I think there is something very interesting brewing in our credit card / payment space. But let me start with, I think, covering a little bit of UPI, which is our crown jewel innovation in the country. Just for context, this started in 2016, and we do 10 billion transactions in a year now. So 2024 was 10 billion transactions. Just for context, Mastercard does 30 billion transactions, and Visa does 50 billion. So not a like to like. Yeah, it's global. Not a like to like. They are payment card network. We are more prepaid payment methods at the moment. But it's just mind-boggling numbers. From a GMV point of view, that's 2.7 trillion of GMV, which was being processed by UPI. So it's very, very interesting. And what is happening is even more interesting. I'll just quickly take you guys through. I think what has started to happen is that India has been on this pursuit of cashless payments. And UPI over the years has steadily eaten into different payment methods. So you look at, the yellow graph is PPI, which is wallets. We all saw the era of 2017-18 when Paytm was the number one wallet, and then followed by MobiKwik of the world. Both of the companies are listed now, and see how it's become almost like irrelevant now. Then we saw debit card, which was one of the mainstay payment methods, has become almost like non-relevant now. And you see the black line which has zoomed up is UPI. It's become 70% of digital payments, right? So that's been the zoom. What has been now interesting is that what is remaining for UPI to eat is credit card payments, right? How do they become more relevant in the credit card payment space? And I think something very fascinating is brewing there. You look at this data. So Rupay credit card is credit on UPI. It has become 28% of credit card transactions in the last 7 months of financial year 25. Right. More than 1/4 transactions on credit card now happen on Rupay UPI. It is not so much in terms of share of or value share. Value share is still 5%. So what it means is that more high value transactions are still happening on Mastercard, Visa dominated credit card networks. But low value transactions have started to happen on Rupay predominantly. Right. And there have been underlying factors to this, that why suddenly, we are seeing this explosive growth. I think two interesting things have happened. I think government has mandated that no MDR, zero MDR on Rupay for less than 2,000 rupee transactions as well, like they have done on UPI. That's one. And then in September, RBI has come up with a regulation or with a notification saying that now with every credit card issuance, whether it's renewal or whether it's new issuance, you have to ask the consumer whether they want a Mastercard, Visa, or Rupay. What has started to happen in my view is that I think banks have started to issue both Mastercard as well as Rupay card, or Visa as well as Rupay card. I see that at least the card which I'm using, I'm continuously getting message that you want to also have a Rupay card. And for banks, it doesn't make any difference because they are underwriting the same consumer. It's just that the limit is being used by two different card networks. I think, I'll just quickly share in terms of how does, the share of what I was saying, that high frequency transactions have come to Rupay. Right? You look at average transaction value on Rupay, CC on UPI is $1,100, whereas on credit cards, it's 5,000 plus. So high value transactions still continue to be there. I think that's the next piece they will go after once this is stabilized. However, you look at frequency of transactions. Rupay versus rest is like 4 times up, 21 versus 5, the last one. And which is significantly above the UPI PTM, which is payments to merchants, almost like 1.8x in terms of transaction value. So, what I wanted to touch upon was that this is a very strategic asset for the country. And, government has, of course, used their muscle in terms of building it, rightfully, in my view. And what we saw during the Russia-Ukraine war, that suddenly, overnight we saw all Mastercard Visa transactions were sanctioned and Russia couldn't trade. So, in light of that, how do you think this is playing out? And by the way, this also adds to our earlier discussion that this is definitely one of those things which India has started to use for exports as well as a software. We are already seeing that the UPI being used in Middle East. It has gone live in Singapore as well. So there are pluses to this. And I think, coming back to strategic asset, look at what, other countries have started to do. So China has a homegrown card network, which is 95% market share, right? So they clearly are of the view that, this is very, very, strategic assets. Payments is super critical, should be homegrown, and, the data is super rich. Similarly, Japan has tried. They're still at 20% market share. Visa still owns 50%. And then we have Rupay, which is now started to become 10% market share. What do you guys think on this strategic asset point before we get down to, what does it mean for businesses, startups? Just quickly.
I think two things from my side. One is, I think credit card as a payment method and almost like a part of the wallet is now becoming critical, because given the borrowing propensity has increased. And if you one takeaway from the UPI chart of course, was that UPI has kind of ballooned a lot over the last 3-4 years, but now there's a sense of like kind of plateauing from a share standpoint. So now, unless a product has a significant level up, this one now you'll see it kind of plateauing on the share. So now, how does that stack start becoming relevant to the other three lines? I think that becomes important because you're now taking a share of the wallet. I think on high value transaction, I'm very keen to see what they will do, because I think on some of the benefits of credit cards in terms of points and kind of tie-ups and collabs, etc. I think become critical. How does the government or how does Rupay do that becomes if they want to, I think they can do a lot. I think they can kind of tie in a lot of government stuff in it, like some schemes, subsidies, etc. So I think it becomes a lot more accessible and becomes a lot more kind of there might be different tiers and so on. I think also from a strategic asset standpoint, completely agree. I think the fact that the payment network remains domestic, that data remains, kind of fungible across different kind of asset classes, and also find its way into banking and investing. I think that becomes a very valuable thing. So I think this is just the start, in my view, and this so exciting to see the technological prowess of India when it comes to government-driven stacks, right? I think UPI and now Rupay. I used to remember. I remember days when I used to like think that government websites are bad and government technology. Like why don't they have good coders and this and that? But this is kind of really put that argument on its head to say that we're actually like homegrown, high quality tech product at scale with zero or close to zero kind of faults. It's just amazing to watch.
I think there is a very interesting, Chris Dixon has this interesting book. I'm not recollecting the name, but I think he makes this point out that when networks, or this is inherent to technology, that when this concept of networks and this inherent ability to exert control over various aspects of society and technology, they just become too powerful as these networks grow and evolve. I think there is merit in these being state-owned than market dynamics trying to figure out that who should be actually owning it. There is a real value there, and my sense is that as most countries realize that at some point this could become like a security threat of sorts. Most countries over time would graduate to having their own Atmanirbhar channels.
I had a question on this, Chirag. I think while the strategic aspect is clear, give us, or at least give the audience a little bit sense, ki what is that 2% MDR that Visa and Mastercard charge? What are the economics? How much do Visa and Mastercard make? How much do the banks make? Because to Shantanu's point on the high value transactions, like I use credit cards extensively and the loyalty points really help. I mean, X is full of people who would get full free trips to Bali and Maldives and stuff. Lakho rupe ke just because they use the right credit card and stuff like that, right? So how is it that these cards like Swiggy is giving a HDFC card with a 10% flat cashback, Amazon ICICI has a 5% flat cashback? Where is all of that money coming from? What's the economic stack like? And with Rupay, if Rupay becomes the largest card network also for India, because your question was how would startups think or what would the future look like? I just want to understand a little bit on the economics, and then maybe the second order effect should become clear.
So just for reference, Amex is the most expensive card. They charge close to 3% MDR. And of course, they are a unique company. They end up owning the customer also. So, they also charge a annual subscription fee to the customer as well. So they're a unique model. They go after the top trust strata.
And just for the audience's clarity, the 3% MDR is borne by whom today? So if I pay using an Amex card and buy, let's say, a Mokobara bag for 10,000 rupees, the 3% of that, which is 300 rupees cost, who bears that?
So at the moment, merchant pays it, but we are seeing this increasing trend in restaurants, at least outside India, where everyone says that, payment charge extra or 1.8% extra. It is, let's say, it is paid by the merchant, but eventually the cost gets,
Passed on to consumer.
Passed on to the customer.
India में नहीं होता है.
India में नहीं है, but we saw during our trip, all restaurants were typically, 2% surcharge, payment surcharge.
Wow.
Also, Shantanu, India में भी होता है. Effectively, they take their prices up because people take offense कि यार अरे आप extra पैसा क्यों ले रहे हो? Even if you now go to tier 2 etc. They'll say card se pay karoge to extra hai. What most people have done is they just increase their prices to incorporate कि आप 50% card से pay होने वाला है तो this is the cost of doing business. But I think Chirag is right. Consumer, it's inflationary for consumption to have this 2% there. I think it's inflationary.
India में भी होने लग गया. If you look at some of these standardized payments such as electricity bills or school fees, there you will see that it is directly upfront given to the passed to the customer.
Correct. Okay, so that's one, the idea. And what's the economics around people getting excited about using credit cards because they get these cashbacks and loyalty points and lounge access and stuff like that? How does that economics work? How do they make money if consumers are paying on time? Technically, they're not paying any card fees and they are getting lounge access and airline upgrades and stuff like that.
So I think if I recollect, 0.5% of the overall MDR is given back to the customer in form of all these points which can be redeemed, right? And then there is this complicated math of breakage, and then how do you carry forward your points, etc., etc. But I think what is interesting is, and Mastercard visas are not that expensive. It's not 3%, but it's closer to 2%. What I think it directly means is that for payment companies in India, if they were, already there was erosion of one revenue pool which was taken over by UPI because of zero MDR. Now that's getting even extended to UPI less than 2,000 transaction already, right? Already that's happening. So that's anyways a headwind in that space. I think what it means is that they again have to, think about more neo-banking, more lending stuff, which is what they've been trying to do.
Different sources of revenue, basically. MDR will no longer be a source of revenue or margin. Because if cards also goes away, then you're right. Like UPI, the revenue and margins both will go to zero.
And we have, by the way, possibly two, in fact, three large companies expecting IPO in the next 12-18 months. We have PayU, which should be first, followed by Razorpay and Cashfree. So three payment companies lined up for IPO. It's going to be very interesting to watch that, against this headwind, how does this play out? Yeah. So, go ahead.
No, I think the other question I had was, if I think about most e-commerce flows, I see discounts around, if you use SBI card, you get XYZ discount. If you use EMI, you get this discount. So I see a lot of card companies sponsoring discounts on e-commerce now, because as the pressure on profitability increased, most platforms have now started partnering with banks and cards and getting them to sponsor a lot of these discounts. In fact, surprisingly, I was very happy to see when I was on my way back at duty free, I thought, okay, chalo, we'll buy something. And I used the card and I actually got an extra 2,500 off, and I didn't even know that. And he said automatically apply हो जाता है वो, आपका ये कार्ड है तो I'm like, पहले बता देते और shopping कर लेता हूँ करके. But I think the amount of discounts now being driven by these cards is significant for all tier 1 as well as e-commerce transactions. Do you see that getting impacted if every card becomes Rupee? Because how will you there's no revenue or margin pool to start funding these discounts as well, right? Well, I don't see Rupee funding any discounts. Is Rupee doing that?
Rupee is not funding anything. I think there are co-branded cards now on Rupee as well, right? So what we saw on Amazon, ICICI, we are seeing a lot of cards now on Rupee as well, which are being floated and which are almost the same thing. And the way it works, at least broadly explaining, the way it works is that, let's say Swiggy is getting HDFC users, new users, so it works as a cap for them. And for Swiggy, it becomes more a retention loyalty play over time, and they get to keep the large part of that transaction interchange. And while card is a card, and then it can be used anywhere. Of course, the battle which HDFC or all banks fight is that typically, you will see a Amazon ICICI card being used only on Amazon 80% of the times. It will not become a primary card, right? I think the battle here is that can Rupee denominated cards become primary cards, right? That's one battle. My sense is what's going to happen is, I think in India, you will see market, of course, is today split, Rupee winning, squeezing even more Mastercard and Visa. What is not happening today is, let's say, international travel. Rupee is not accepted. Only Mastercard Visa is accepted. So then in that case, you will get these niche large use cases large value use cases where you will find Mastercard, Visa doubling down. Whereas for all domestic use cases, you will find Rupee winning over time.
But what's my benefit of, let's say the merchants are already priced what they are, right? Unless the government comes out and says that start accepting Rupee and start giving a discount because people are using a Rupee card because you're not getting that 2% MDR that has to be paid. I don't see a reason if I'm not going to get loyalty points, if I'm not going to get any specific discounts because I use that particular card or during the Amazon or Flipkart sale, if I'm not going to get to use Rupee internationally, I mean, there is very little reason for me to move to a Rupee. So let's say I have a Access card, Access or now HDFC as well, right? Because they call me and say, you have an option, you can take your Visa and make it Rupee. Why will I do it? Because
it's more supply led. It's more supply led. So think about it. You know, India today has, I think, 6-7 million these QR POS, right? I think if you look at those traditional POS machines, probably that's 1/10, 1/20th of this number. So on the supply side, the acceptance on credit on UPI has suddenly become like wider, right? Think about it from a bank point of view that now at the moment your credit card was accepted on 1/20th number of POS. Now suddenly you are seeing 20 times more POS where your car or your credit line can be accepted, right? So that's become one very, very significant change. And then on top of it, government has said that, okay, issue more Rupee cards. So, it's more led with UPI QR. By the way, just to explain, the way it works is on the same QR code. You open the same UPI app, you can set up a UPI credit and it functions the same way.
So the only benefit
that's very
you're seeing,
fundamental.
the big benefit for Rupee is that credit on UPI is a massive leverage on the Rupee, where at least beyond the top 30 million consumers who have enough credit access, if you want to make credit available and accepted as a digital payment form across most of India, because QR and UPI is now well accepted, building a credit rail on top of it through Rupee is the biggest benefit why the acceptance will increase. So I think the volume will go up and that shows why the AOV is
lower,
much lower as well, because I think the top 30-40 million households are still going to prefer Visa, Mastercard because they travel internationally. They optimize for these points and lounge access and everything. Beyond the top 30-40 million, I'm assuming this penetration will increase much more significantly.
By the way, lounge access, etc., all of these things are on Rupee also. So they might not have those top of the tier reward programs, which is what, let's say, Amex would have.
One question is, MDR nahi hai to, because I'm not going to give lounge access unless I'm going to get paid. If I'm a lounge, right, or janta aa rahi hai, unko serve kar raha hu, I need to get paid for it. And I'm sure the Visa or Mastercard or the Axis Bank or HDFC is actually paying per person who's coming in.
What is interestingly happening is that payments is becoming engagement in India. So this also in credit card also start to become, and now people are finding out more, like we have seen in fintech world, that you enter through payments and then you start selling more credit products. This is what is happening, that banks will enter through this. They're finding this sweeter entry. And then, of course, you make money on 2,000 rupee about transaction and other financial products. So that's where it is headed. Yeah. And does it lead to what you were mentioning? I think is interesting. That does it lead to overall credit expansion? Banks were not able to do, let's say, small ticket underwriting. Now this enables that. And does it lead to overall credit expansion opportunity, or will lead to overall credit expansion in the country over years? I think that's one very second order effect which is happening.
Actually, the biggest interesting thing would be most banks will not lend below CIBIL 750. If your credit on UPI becomes very omnipresent and used very lucratively by, let's say, 200 million people, effectively you're starting to build a credit history, which banks can start saying, I can start building more comfort and my lending base can expand beyond the top 40-50 million users itself. Like auto loans, etc. Then can, because I have a credit history with you because you've been using credit on UPI through Rupee. And even though you are not a very power user, at least I have some history with you to understand you as a person. And that will help. I think that's maybe the end goal. It's not ki, chalo sab bahut paisa banayenge, but can you penetrate have your banks or your core financial system start underwriting more and more of India, which today isn't happening for sure, because that becomes the NBFC very high interest rate segment today.
I was just checking, by the way, I don't know, for our viewers, just go and check out rupay.co.in. It's one of the cleanest websites where they have all the lounges. Revant, there are 4 in T3, for example, including Encom and so on, where they have access to. So they are.
मेरे को थोड़ा समझ नहीं आया कि ये फंड कैसे कर रहे हैं करके लोग, क्योंकि
0.9% है वैसे MDR है अब 2000 रुपए के ऊपर ऑलमोस्ट 1% है. सो देयर इज इट्स अ नॉट फॉर प्रॉफिट काइंड ऑफ अ गेम. माय व्यू इज एटलीस्ट थोड़ा बहुत तो कर रहे होंगे प्लस.
नहीं बड़ा एवरेज जियो भी दिखता तो 1000 रुपए, तो लोग यूज नहीं कर रहे हैं रुपए को 2-3 हज़ार
I think Revant, while average is down, I think they will want to get into that higher value transaction as well over time. So उसके लिए they are pushing everyone that we need to do more these co-branded cards, have these loyalty programs.
There are
all of that
co-branded
stuff.
cards. Also like
Many co-branded cards.
Kisan credit card, Mudra credit card, बहुत ही inclusive. Like I think that at least the intent is to be tremendously inclusive and kind of make it a product for.
क्योंकि वही हो रहा था ना, the number of total credit cards in the country was stuck at about 35-40 million and the total user base was like longest time 30 million के ऊपर कार्ड जा ही नहीं रहे, क्योंकि बैंक बोले नहीं देना है हमको यार इनको, because these are not credit worthy people. How do you expand the credit, how do you penetrate more credit access in India? I think that's where this would be a interesting and to your earlier point, Shantanu, consumption लाना है तो यार credit access तो देना पड़ेगा आपको.
अरे boss, this is a huge one. I think this is one of the things that will kind of.
और I think इसका एक second order effect और भी है. I think in India, while we have seen this uptick on UPI digital payments, what has not changed a lot is usage of cash on delivery on e-commerce. I think this channel will definitely aid in that. UPI has helped. My sense is if UPI was not there, India would be 80% cash on delivery. UPI has helped. But I think UPI on credit is going to further help, because all of these people who are doing cash on delivery will be able to pay through UPI and credit. Credit enables that, you can do this pay later and enjoy the product. And, my sense is this is going to have a 20% impact over the next 5 years.
I love the way you framed it, Chirag, that payment has become engagement. I can totally imagine my mom having a Rupee credit card, buying stuff on Blinkit, and then like kind of getting some rewards for it and so on, and like getting totally hooked onto it. I can totally imagine that happening. So give credit to a customer like that, get them engaged to multiple different things, and underwrite it through a government. So if you're linking, so how does payment happen? How do you pay for the credit you've taken? You pay it auto deducts from your UPI bank account, or what happens?
Oh, so you're given a limit. You're saying on the due date.
How do you like? Can you just take a UPI, just accounts where
you can set up a mandate, but otherwise it just functions like a normal card. You can set up a mandate to pay automatically, or you can pay on that due date. Okay, I think we did a good dive on this crown jewel strategic asset of the country. I think the way they have pulled it over the last 7-8 years has been fantastic. Lots to learn. How a state-owned startup type functioning company can really change the game. I think it's truly a startup type behavior, wherein the way they have grown over the years. Lots to learn and lot of exciting things happening here. They continue to change the digital landscape of the country for a much better future.
नहीं भाई आ गया नया hoop.
Oh, nice. अभी तो it will take 1 week to settle.
But what happens in this? Like पहले दिन तो बहुत stress में आ गया मैं. Recovery showed like 40%. I'm like भाई कैसा क्या कर दिया करके मैंने. But I am assuming it's sort of calibrating to my body and compared to global stats.
हाँ वो तो वो करेगा ही. But I think their overall push will be is to sleep more.
Which is fine, which I already see, right? मतलब सुबह मैं उठता हूँ और बोलते हैं आज रात को कितने बजे सोना है करके, right? So I think we discussed this, right? Like sleep is like actually the best drug for the body to heal itself as much as possible, which is very clear. But I'm just trying to get calibrate if all the other metrics are near accurate, because steps मेरे को काफी I'm still not confident on, like yesterday it showed me I walked 10,000 steps. I just found it very hard to believe. I know I wear it all the time, but मेरे को लगा थोड़ा सा off है steps. Or even calories, it showed me I burned 2,200 calories yesterday.
Steps is still beta. Calories, I think they have a nice blog. You can read that, how do they calculate. I don't recollect.
So I saw yesterday I burned 2,200. So you're saying it's accurate on calories, huh?
No, it's not very accurate, but you should treat it more directional. they themselves say I think there is a 6-7% error in that.
6-7% ठीक है यार. 6-7%
हाँ
on
वो
2200 is still like
यार
100 calories. 100.
they are very correct. तो मेरा भी इतना ही है. मेरा भी I burn like 2300 calories a day.
मेरा एक दिन हुआ है देखते हैं. I'll track it for a week and then see how it stabilizes. But
I think major focus is on recovery, big time.
I in between stopped magnesium just to say that I'll sleep myself on time. But आज सुबह उठ के लगा नहीं भाई आज से तो फिर magnesium दे रहा हूँ मैं. Because I it takes an hour and a half after I get to the bedroom for me to finally go to sleep. And I think that should get shortened a little. And there magnesium definitely helps because within half an hour, I think the melatonin production starts so quickly because of the magnesium getting absorbed in your body. Automatically then that push comes to chalo ya so ya hoga relax.
What are you having for magnesium, Revant? Which one?
We have our own magnesium glycinate gummies. So there are different salts in magnesium thionate, magnesium glycinate, magnesium carbonate. The science behind each salt is a little different. We've sort of figured that glycinate is a good salt. We had tablets and capsules before that worked very well, very high NPS, but we have figured out a way to now put it into gummies because the form factor helps when it's like a dessert. It's a sugar-free product, but थोड़ा तो खाने के बाद अच्छा लगता है ना कुछ मीठा खाने के लिए. So the gummies work that way well to form that habit post dinner where you just have a gummy and then within half an hour to 1 hour you start the melatonin production sort of starts increasing because of magnesium. Which is
you're supposed to have it in like when are you supposed to have it?
You can have it in the day also. I can have magnesium in the day also. It's just I'll not feel sleepy because of that. It's just that it's a
regulator.
No. Okay. So there are 2-3 things, right? Maybe it will require a more detailed but your cortisol levels get more balanced. Your melatonin production may help hota hai wo. It basically, in fact, the discovery was interesting, right? Psychiatrists use it for stress and anxiety. Whenever people come in with high stress and anxiety, it's a non-prescription OTC salt that most people are deficient on. So that's where the discovery happened, and now it's a regular supplement that most people take because our Indian diet also, the magnesium consumption is not that high. So, I mean, I at least enjoy the supplement because it helps me relax. Also, muscle recovery, by the way. Nerve health, multiple benefits. What you were discussing before you just joined was helps go to sleep on time and helps in a much more deeper sleep. So your REM and deep sleep is higher if you've taken magnesium as well. That's the other thing I've noticed. And that's the most important thing for recovery, right? The percentage of time you're in deep sleep.
Yeah. So I think omega-3, magnesium and Vibact are the 3 things that I have been told to start taking without thinking. So
What's the third one?
Vibact, like gut cleansing.
That is so clear. Omega-3 also was fundamentally अपना problem वही अपने diet में DHA बहुत कम होता है plus EPA भी. So I agree with you. I mean, I need to start. I am more worried about Alzheimer's for myself. It slows down the brain rot as well, which usually, I mean, it's not precisely Alzheimer's, but it's much better for the nervous system around and the brain as well. So
magnesium, is it?
No, omega-3.
Omega-3.
But it needs to have both DHA and EPA.
So Man Matters has omega-3 also?
We have, but I am now beyond the capsule and यार मैं push कर रहा हूँ team को gummies में निकालो. Problem है वो थोड़ा सा कड़वाहट आता है because it's technically fish oil, right? That's the source. Masking that taste in a gummy is a hard thing. But at least we have the capsules. But I don't know. I am now beyond the capsules. मेरे लिए तो जिंदगी अब gummies ही हो गई है.
Oh really? But doesn't gummies have sugar in it?
So gummies are made from chicory. Chicory root. It's a plant. It's a fiber. It's actually a prebiotic. So by design, gut health, I don't need to take anything because all our gummies are prebiotic fibers.
What is
actually made from a prebiotic fiber?
Or probiotic? Like,
prebiotic is a fiber that essentially helps the growth of the good bacteria. Probiotic are directly those bacteria itself. So prebiotics आप लोगे अगर, so it will help you, your gut, the growth of the good bacteria get accentuated if you take prebiotics. Probiotics are exactly those bacteria that your gut anyway produces.
God. Revant, I think in the interest of Asymmetric being a sustainable long-term podcast, I think you need to send a lot of this cool stuff to Chirag and my residence is free of cost. So we continue to kind of live healthy lives. I actually got myself this one really cool Gabbit ring, which my first 16 days of January, I have literally logged everything that I've eaten, everything that has gone into my mouth. I've logged it. So that's a
Which app do
significant
you use? Which app do you use for logging in?
गैलेट का ही आता है.
Gabbit का ही app है. So it gives me a sleep score, it gives me activity score, it gives me calorie deficit surplus, VO2 max, SpO2.
It's a little
heart rate.
cheaper than Ultra Human, Chirag. And they are trying to build a bigger ecosystem around products and supplements that are personalized for you based
इसका
on.
best ये है कि Ultra Human has to get charged every 2 days. This one gets charged every like 7-8 days चल जाता है.
बढ़िया guys. Great
Excellent.
episode.
It was amazing.